Good evening, everyone. Give me one moment. I'm thinking I'm supposed to be going live on Google Meet as well, so bear with me. All right. But tonight we will be going over how to manage trades part two. Just want to dive a little bit deeper than that. And I would like to start off today with some actual tangible results and some tangible trading. So we're going to hop right on the charts just to get into it, and then I will cover a few different concepts for you guys to kind of just think about and meditate on as you're trading. So the goal from coming to trading class is you just get more and more comfortable in the markets. Ideally, within 2 to 3 weeks, you should be making your trades your first week. After that, you definitely want to just kind of stay in your demo account, regardless. Real trades, not paper trades, whether you're trading with me, get in your demo couch, just start building that habit. But being able to manage your trades, that's only going to come from experience and hands-on experience, because how I manage my trades might be different how you manage your trades, and that's kind of what I'm getting at. You want to continuously find your weaknesses, where you fall short at in the market, what you're not seeing, and going over certain information. So tonight we're going to kind of cover a few of those things and tell you guys a few things that I did today. Because I was I'm not sure if you guys saw, but gold tanked today. I know Bitcoin tanked today. So it's a lot of liquidation going on today. And the market's still recovering. So that's the main reason why I want you guys to see firsthand. And I'm gonna show you guys the positions that I entered to I guess after I got and realized I was in a tanking market, how I managed my trades to get out of those with as least as minimal as possible. All right. So without further ado, I just want to see if I can. Okay. Nope, no, that's not the right meeting. Give me a second. So I'm gonna go ahead and share my screen over here. Good evening, everyone on Google Meet. Sorry, running a little bit behind. Give me one second. I'm going to share my screen. I'm going to go ahead and get into it tonight. We're going to be covering, once again, how to manage your trades properly. I feel like it's a very important thing to kind of go over. So we're going to hop right in the markets. Let me get back over to Zoom and start sharing the screen. Cool. So here we are. So tangible examples today on how to manage your trades. Today, gold had one of the biggest drops that I've seen, in quite a few weeks. It would say that you could say that we're on to a downward system, but honestly, it just looks like a whole bunch of liquidation. Gold was at a 7 or 8 week high. It was coming sooner or later, but nonetheless, it's one of those things you want to be able to prepare for. So I had this trend line drawn, and it was respecting it at first, but as soon as it didn't respect it, I knew that it was like, okay, it's over. After it closed below, that's one thing, but it closed above, that's another thing. But when it goes down this low and it passed the whole EMA right here, I don't know if you guys see the screen right there. So try to enlarge it. Second. And if you guys have any questions along the way, feel free to just unmute yourselves and interrupt me. I'm here. I'm here for you guys. I'm sure why it's not like control screen. Goodness. Okay. There we go. All right, cool. So if you're looking at my screen, gold was at 29.45 basically at all, heading towards an all-time high. Had some mean rejection. I would like to get to the bottom of why it happened, but sometimes it's just the way the cookie crumbles. So with this type of drop coming all the way from 29.45 to 2,900, mind you, this is the hour time frame. So 2,900, so drop 45 pips in an hour, right? Something to really think about how volatile the markets are, and this is why you do want to set your stop losses. This is why when I do send out signals, you definitely want to have those stop losses in place. But once again, going back to market psychology and how you guys should be thinking about when the markets are tanking, if you are getting in for buys or if the trade even reverses against you. Because what it was doing a lot, it was jumping up and looking like it was about to reverse back into the bullish direction, and then it just didn't. So it did a lot of that. So I'm sure a lot of people got whipsawed, is what that is called when you get into the markets, get out of the markets, and try to get in for a sell position. And now the sell position isn't going good for you either. And that's what that's designed to do. So basically, it's going up and down, taking everybody's stop losses, buy limits, all their pending orders are getting out the way, and that's what you're seeing in these large candles right there, right? So that's how you want to visualize that mentally on what's going on, so you can make some sense of it. So obviously, at some point, somebody was like, "Hey, this is enough. This is enough." 28.89, right? 28.89. 2087 really. So is where it got down to. There's no way that anyone could have predicted that it was going to eat about. I'm going to say that's probably about 5 or 6 standard deviations. Bitcoin did a very similar drop. They said Bitcoin hadn't seen a drop like that since August 2024. So that obviously something was going on today. We can go to Forex Factory and just kind of do some research, but I wanted to pull this up so that you guys can understand how to tangibly get into these trades, and if it does go south on you, how to manage, right? So, few things that we covered yesterday. Obviously, we were talking about getting your stop losses set, but also, give me 1 second. I wanted you guys to also be able to focus on finding other markets. So this is one market. Obviously, we trade gold and Australian dollar. They all did very similar things. So those are not the same markets. They're 3 different markets, and they all did, and they are continuously doing the same different things. So obviously, they're in congruence currently right now. But in the same sentence, we want to be able to identify when we need to be turning stop losses into stop profits and finding break evens, or turning our stop losses into break evens. All right. That's what you really want to focus on. So if I believe I got in at 29.31. And I think I rode that to about 29.39 area, and then I got out, waited to see what it was going to do. I got in at 37 again after that, and then it just started tanking. It started tanking. And I'm talking about it came all the way down to like 29, 28. And I had to go ahead and kind of maneuver because it was doing some jumping, and it was holding steady at the resistance area. So I may have gotten in prematurely, but I was looking to ride the wave on the way up. If we were in our standard deviation, if we were in our scope of work, which we clearly were, we had clear levels of support right here, right? So I'm looking at all these different factors. Obviously, this is what trading is about. Sometimes randomly you can't make sense of things. Sometimes you can. President Trump might have said something. Who knows? The fish market might have tanked, and that caused gold shipments to not go. Who knows? Okay, so I don't want you guys to focus or fixate on any one trade. Just understand that there's the next best trade to place, and I want you guys to focus on that mainly, right? And I'll give you 1 second to pull back up my notes. Secondly, focus on building your equity, right? Next best trade. Obviously, you want to lose small, win big. So if you're focusing on building your equity, let's say it did start tanking on you, it doesn't mean that you kind of completely leave it and abandon it, but you do want to manage it. So you might, if you see that it's taking off a lot quicker, maybe you might set your stop loss up a little bit, because you see that, hey, obviously volatility has completely changed, and being able to identify that, you probably would have been able to notice that once it got to like right here, you'd have been like, if you had a stop loss all the way down here where this blue line is, right, or one ATR under that, right, if you had a stop loss under that, you would have saw that it dropped down this much in an hour. You would have known that's not normal. I would have moved, just managing my trade, I would have moved my stop loss up to about right here. And because at the end of the day, I know that's another level. I see where it was retesting before. So it's really just kind of about finding areas. So you got to test right here. Got to test right here. Got to test right here. Got to touch right here, right? And kind of almost respecting the area right there. So nonetheless, after it went down on me, I was basically looking to get back in on another buy. So I opened up another position to close the gap from where I got in at 29.37 when it went down to about 29.30 area. I was looking for another trade. I think I got in again at like 29.27, 29.28. And then I waited till it got about 29.30, turned 29.32, and then I got out. And so it split the difference in the fact that I got in at 19.37 on a bad trade, but because I reopened up another position, I found the next best trade to get in. Where's the next level at? If you look at this trend line right here, 19.27. You got me? So being able to manage your trades to close out at break even is a skill. You have to be able to identify it, and you have to be able to. Sometimes you're not going to hit it completely correct. The goal is just to mitigate as much of the loss as possible, and you're going to do that by just opening up a second entry position at a discount rate. But however, that did not work in this situation. So I'm just giving you guys, roundabout general. But what specifically happened here, that's not what happened at all. It kept going right on down. Right. So I mean, we're all the way down at 28.90 now, right? At 28.90. I ended up just calling it a day. I didn't trade anymore. I think I had 3 losses, and then I just didn't trade anymore. So I was done for the day, stick a fork in them. And then I was looking at, but I kept my eye on the market the whole time. So that's the other thing I want you guys to understand when you're building equity is keep your eyes on the market. Just because, you might have lost 3 trades, don't just, come back an hour later, just see where price is. Got me? Just so you can understand how the movements are happening. Start notating the movements. That's what it means to kind of study a market. And it's not saying you have to, keep your eye on it 24/7. It's literally just saying, hey, check in on the prices. Just notate, oh, at 12 o'clock it was at 29.22. At 7 o'clock it was at 46.02. Right. And you're just notating these prices. So at least when you get back in the market, you're gonna say, you know what? About 3 hours ago, I remember checking and it was at 46.02. This looks like a discount because now it's at 49.58. You got me? And so that's how you want to think about the markets. That's the easiest way to kind of think about just buying gold for a discount. That's all we're doing, right? Next thing, journal your trades. Journal your trades is what I'm saying. Journal your trades. I want you guys to notate what type of volatility, the type of news events. Like I said, you guys can go to Forex Factory. I'll pop that up for you guys real quick. Zone features in the way as always. All right. So, I was looking beforehand. I didn't see anything outside of crazy outside of President Trump speaking. And now that it's notated, we can see what he actually talked about because that wasn't there before. But it did say that he was going to speak, and he did say it was tentative at like 1. So apparently he did get to it. But nonetheless, view full details. All right. Trump orders copper probe and first steps to tariff. Interesting. So yeah, nonetheless, copper, goodness gracious. So I wish I would have known that. I mean, it would have been good to know, but I don't think I was done trading by 1 o'clock. So nonetheless, it's something to think about. Just when you see something that's abnormal, I was starting to already peep that it was abnormal because it was not pushing. It was like 10:30 and it still wasn't pushing upward, and I was like, okay, it started getting me in a more of a less confirmed situation, mentally. So for all my students, that's one of the reasons why I didn't send out a signal. I was not sure. I was like, it doesn't make sense the way that it was moving. I was like, something is going on that was different. And it was only because I know how gold normally comes down, finds a spot, and then kind of rejects back up. And it wasn't doing that at any of these spots. Even when it did reject back up on this one, it was temporary. Next hour, it was right back down. And that's not normally how gold operates. So that was the first signal was here right in this area after we had the let me see if I can zoom in for you guys. Give me 1 second. But you guys be able to understand how to read these candlesticks. Oops. Spread this out just a little bit. All right. So when we had this candle right here that came down into this supporting trending line that I drew maybe a few weeks ago, right? I said, boom, okay, we got a double bottom. That's always a good sign. And the right candle is bullish, right? So once we got here, this candle opened right here. It went on to proceed for a higher high, but then ended up closing at a lower low. And I could see if it closed down here at the support, but it didn't. So it was just this is a hammer candle, a reverse hammer, and that's definitely a key sign for basically downward movement, right? And that so this this candle was a key indicator that something wasn't right because gold doesn't normally do that, especially at the time of hour that it was and the volatility. Everybody was focused more on selling, or the whales I feel like were more focused on selling than they were on buying just to liquidate. So the whole time, it started causing a panic sell, and this candle that's just crazy to go down 45 pips in an hour. It reminds me of NFP, but it's not NFP day, and NFP goes like 100 in a whole day, could be easily. So something to think about. Uh, Nonetheless, if you're getting in for your trades, all you want to do is continue to focus on the next best trade. Journal your trades. Focus on building equity. That's obviously the goal. Why we're here. You want to build equity in your account. Do go find the next best market to get into. Right. Um, Understand managing your trades is also managing yourself, right? This is where you want to work on your disciplines. You want to work on your trading habits. Obviously, managing a trade, if you're looking at one trade or you're looking at 9 trades, you need to be able to have it organized in a way. I try my best to keep in the same format with you guys: gold versus U.S. dollar, gold versus Australian dollar, gold versus euro. Just so in you guys' mind, when you're even looking at your markets, you're not kind of flipping back and forth. You're going from one to the other in a systematic way. So being able to stay calm, it takes practice. It's one of those things that you will get over time. But it's also just going to be a matter of you staying persistent, keep showing up to the markets. You're going to get better. And ideally, after 2-3 months, you're independent. But in all honesty, even with the mentor, even with the best of mentors, it's going to take you a few years to really get down concepts, really build habits, really even find things about yourself that you didn't even know were there that you got to overcome now in these markets while you're managing these trades. So, fear of loss or, just being too hopeful, thinking the market's going to go back up. These are all emotions you got to deal with. Look at the science, look at the numbers, look at the charts, stick to your plan, your trading plan. If you say you were going to stay in for 20 pips for stop loss, don't move it to 30 just because it got down there. That was one of the big things that I used to mess up when I was early trading early in my career. I would always move my stop loss down. I'm like, no, it'll be okay, it'll be okay, and it was not okay. It was not okay. So close it out. So one of the things that I did do, I want to give you guys 3 things that I did do while I was managing those trades today. Um, Understanding that you have to have a stop profit at some point. So obviously, if a trade goes up, I did get my first trade was a win, so I got a stop profit. Uh, I want to say at 42 or 43 or something like that. And then I was just looking for like the next best position. I should have stopped there, didn't know any better. It happens. Hammer candle comes, reverse hammer candle comes. And so what I did was I closed out my winning position so that I could pad my account. After I saw that I was going to be experiencing drawdown at 29.37, I started saying, "Hey, I need to start looking for an exit plan." I don't necessarily always have an exit plan from the beginning because I don't necessarily know if the trade is winning or not. But once I have more information, you can do something with that information. You want to use that to either maneuver to take minimal loss because you know it's going to tank on you now because it invalidated your trading pattern. It came over this trend line, right? And closed, went past support and closed, went past support again, broke through again. You see what I'm saying? So that habitual offenders, right? And you got to be able to get out the market and don't get your emotions involved. Um, what I did was I looked for the next best trade. I looked for the next opportunity. So then what I did also to manage my trades was I got in for another position. So those are 2 things that I did right there to manage my trades so that I can get out at least a break even point. You got me? Closing out winning positions to build equity is important. And also it's one of those things you can do to increase your lot size because now the probability of it going back up is a thing. So let's say you're down in a trade, you came in at a 0.01, maybe you come in at a 0.05 at a lower level or at another area of support because like now at this point it's almost guaranteed to come back up. We got to at least look at hold on. We got to at least look at these retests. This was over, quite some time, but none of these levels are like real solid. They don't have a lot of historical data at these prices. So I'm not surprised that it's easily just melting through support the way that it is because we've been on once again a 7 or 8 week high. You got me. So something to think in mind. I knew it was coming. I think I talked about it like last week. I just didn't know when. And this is definitely what I would call a significant drop. Obviously, it's starting to recover and it's still going back up right now. So I mean, we could see some crazy stuff over these next few days. I would not be surprised if these tariffs, those copper tariffs that President Trump was talking about that we read about in Forex Factory just now, I wouldn't be surprised if that kind of started, if it was ranging. I'm talking about from like here all the way up here somewhere, all the way up here. I can see it start ranging, It may, even if it isn't a downtrend, there will still be buying opportunities. As you can see, the bulls are always still back in town. There's always going to be buying going on. You got me. So never feel like there's no way you can eat. Going on to finding another market, all that means is either you go to something in gold or you go to something else that you might want to explore in your demo account, and then maybe sooner or later you move it over to a real account. You got me. Just make sure you're staying proactive about managing your trades. That's the whole goal of what you're trying to do. All right. So any questions right now about anything that I spoke about? Use ugly lines out of here. I gotta work on my artistry with these lines. Don't judge me. Goodness gracious. But nonetheless, that's one of the things that I wanted to talk to you guys about today was just how to manage your trades. Call it a part two of yesterday. In a nutshell, you want to just make sure that you can not panic. You want to have a plan when your trades go against you. You want to have a plan when the trades are in your favor. You know what I'm saying? So just something to keep in mind as you're moving forward. Just understand you can call me, you can text me, however you normally get in touch with me, and I can help you understand more about the markets. I try to get updates out to everyone, even what I'm seeing in the current moments, just in case you are at work. And if to make that easier for you guys, you can download WhatsApp, and then I have the trading Lions Wall Street trading group for you guys, so I can give you guys market sentiment updates, just insight on what you should be doing, and hey, maybe I'll let you guys know when there's the next best time to get in, or if I get in on trades. Just showing you guys how to actively manage. I'll let you guys know when I close my trades. Same thing. So even if I'm closing a trade early, I might have sent out a signal, but if you're not in the Lions Wall Street group, you don't know that I closed that trade early. You see what I'm saying? So I'm gonna keep you guys up to date. If you have any questions, lionswallstreet.com. You can reach us at 833-563-4763. That is our corporate line. And our email is info@lionheartmotivationfactory.com. But nonetheless, here for it. Something go to meet here for it. But if you have any questions, I'm here for you guys. Thank you for attending tonight's class. I hope it was insightful. If you guys have any questions, this is definitely the time to ask them, or you can ask me later. You can email me, however you normally whatever's comfortable for you guys. But I hope this class was insightful, and I hope you guys got something from it tonight. Other than that, I'm going to go ahead and log off. So I'm letting you guys out of class early tonight, I guess. That's what's up. I don't know about you guys, but that was a whole vibe.